Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the China stocks. There was that big move on Thursday, and then there was some China stocks that were they've been running. The sector's been running, and then there was just for a little recap, there were some stocks that were running on Thursday, and then there was a bunch that were gapping up after hours on Thursday, and people loaded them, and then on Friday there was lots of gap up opens. And so that created, just all across the board, all these China stocks were running, whether they had news or not. And so it was a sector-wide rally, and it turned into a bear trap or a bull trap for many people. And so what I'm going to do is I'm going to show you two time frames for each of the ticker symbols. For just about all of them, I'll show you a couple time frames, and then we'll just go over some quick support and resistance levels. Okay, first is CHNR. Now this was actually the strongest of the China stocks. It did make a new higher high. It does have a nice uptrend going. It has had some previous volume, so even though volume was super light here, it has had some volume during this uptrend, and it is above all the moving averages. So out of the China stocks that I'm going to show you, this actually has the best uptrend that's been trading for the last few months, above the middle Bollinger Band and the moving averages. So what it needs to do is keep riding EMA 4 here at 298 support higher. If it closes below EMA 4, you could possibly see a drop down to that middle Bollinger Band. Notice there was big volume behind the move, a recent P-star bull flip, and like I said, it is currently trading above all the moving averages. If you look here at the CHNR weekly chart, you will see that it was in this tight sideways channel for the entire year of 2017, with down here, around what is this, the 190 or so as the bottom of the channel, and up here around $3 is the top. That was the high close actually from back here in 2016 in November, and so that level broke actually on Friday. There was a close above high close resistance. It broke above this channel. It was the highest close for the entire year of 2017. So that was really bullish. What it needs to do now is close, and as you can see, it was the highest close for 2016 as well for a weekly close. So you have to go way back to find a weekly close that was this high for CHNR. So that's nice. It's in an uptrend here on the weekly chart. It's above the 100, the 50, and the 200 week moving averages and the middle Bollinger Band. It's riding EMA's 4 and 8 support higher. Those are all great. It had a nice volume spike. Now it's hitting the key resistance level. It's all about this blue line. That's the 300 week moving average at 330 over here. So if it can close above 330 for the week and turn the level into support, that'll signal it wants to head higher. If it fails to break 330 resistance, that will be a signal this is a temporary top, and you could see it cool down. Okay, let's look at CPHI. Okay, so this closed up 137%. It was a giant move. If you look here, you could see that there was a black candle that formed today. Notice the black candle with the long upper wick after a gap up open. And so if you follow our technical analysis, then you know that when that candlestick pattern forms, the signal is to head to the sidelines. And so that's usually what we do when that happens, is head to the sidelines. And today was Friday was the same strategy. All the money was made with people that had loaded this on Friday. People that either loaded on Friday, which you could see there was a mini little volume spike, or people that loaded after hours, or because the open was way up here above 75, and so it got driven up, and when the share price ran up to 145 and pulled back, it formed this long upper wick, and so that was a signal that there was lots of profit taking. I mean, it was well above the EMA 4 and above the upper Bollinger Band at 32, down here at 30 and 32. And so once it got below the open and the black candle started forming, if you didn't get out up here, that was your signal to exit. The candles are likely to work their way back into the bands, which would be down here at 130. There is a gap all the way down to this 119, 120 level, the top of Thursday's candle. Okay, so there's a gap between high of day on Thursday down here, and low of day on Friday. So there's a space between these two candles, and you know that eventually could fill. Yeah, so keep an eye on it working back into the bands. Keep in mind when that black candle forms, the signal is to head to the sidelines. As you can see, there was a climax spike at the open. Notice the giant volume spike. Notice the long upper wick. This candle was forming above the upper Bollinger Band. The candles started working their way into the bands. What you do is you draw your high close resistance level, and if you fail to see another close above that level, that's a sign of weakness and that it's likely to cool down. If you didn't exit over here when you know this EMA4 broke on this candle at 10:45, that was a red flag. And then when it failed to get back above a new high close, that was a red flag as well, and it got back below EMA4. So there are lots of signals on the chart that it was breaking down and not heading higher. And then if you didn't get out on any of those signals, you know, it also broke below the middle Bollinger Band. All red flags that the bears were attacking. Now it did hold 45 support. Notice how 45 did hold. If that level holds, it could bounce off and get back above this middle Bollinger Band. That's currently the key level to break at 58. It has to get back above 58. If it gets above 58, it could run back up here to this 95 level. Fail to get above 58 and fail to hold 45, then you have the 50 simple moving average right below. This is the key support level. It needs to hold this green line. If that breaks, you could see a drop down to the 100 simple moving average at 30. Okay, let's look at CGA. You know, it closed up 11%, but look at the long upper wick. It's the same the same scenario. Yeah, and then what I wanted to show you, but just go back here real quick with CPHI, and I'm not going to show you on each one, but it's the same thing. If they have the long upper wick and it closed below the open, you know, especially with the, if it just has a long upper wick, you're going to see a spike down in accumulation, distribution, and shaken money flow. And you know, especially if it drops well below the opening price. And so down here, look how there was a huge drop for accumulation distribution, a big spike down on CMF. Those are big red flags. Okay, let's look at CGA. So this would have the same thing on accumulation distribution and shaken money flow, the long upper wick. Even though it was up on the day, it's going to have a giant spike down. These are red flags. Just like the black candle, when we start seeing the long upper wick form, the safe thing to do is head to the sidelines. Now this is in an uptrend, and it could keep pushing higher. If the candle's working the bands, you want to see it hold EMA4 down here at 143. As long as it holds, the uptrend can continue. It's just this whole dilution, sell and share thing. You know, it's always safer just to go to the sidelines when you start to see that form. Notice there was the giant volume spike here. Now I'll start showing you some 15-minute charts. And for the CGA 15-minute chart, you'll see it ran up and then it formed what we call the climax spike. It hit high of day and it formed the long upper wick. Notice how that was on the largest volume bar of the day. That was followed by a red candle. This was your signal to lock it in right here. This was your lock it in high of day. It never got back above 180, and then it formed this downtrending channel. So now it has to get above that middle Bollinger Band, currently at 163, basically 1627. If it fails to get above that, then it could come down here and test this low of day and the 50 simple moving average at 149. It has to stay above 149. If that breaks, you could see these other moving averages tested. Okay, let's look at CCHI. Okay, very similar setup here. Okay, so it formed the long upper wick with the black candle. Now it did come down and it almost filled the gap. I mean, it's right there. It's basically filled. There's just a very tick that would fill it. That the size of that line right there. And so basically, it came down. It tried to basically fill that gap. And then now what it needs to do is get above the closing price here on the 19th. If it can get back above that level, that'll signal it wants to head higher. They sold some shares, profit taking. You've got the spike down, accumulation, distribution, CMF, etc. But this isn't an uptrend, and it is above all the moving averages. So this has a good chart going. It just had the ugly candle form. If it pulls back and it holds EMA4 at 233, you could see a bounce off of that and the uptrend continue. It has to break this $3 resistance zone. Above $3 signals that it does want to head higher. Keep an eye on it. We're going to see if these can push higher. If they just pull them back, and then maybe they'll run them again next week. You just have to keep following the charts. As you can see here, a drop down to 260 would fill the gap. Notice how the wick on the lower wick on the candle there at 2 o'clock almost filled that gap, just so close. They could consider that filled. If 265, the 50 simple moving average holds, if you see it stay above 265 and then break above 289, that'll be a signal that it's ready to run again. It has to get back above that middle Bollinger Band at 289. The eventual high close level to break is up here at 430. Okay, let's look at CNIT. Same setup. It closed up 27% on the day, but it had the big black candle. When we see this form, we just go to the sidelines right away. We have so many good charts every day that we don't need to mess around with this. You know what I mean? You don't need to mess around with this. There's too many other plays. I mean, we have more good setups every single day than anybody could possibly trade, and so why mess around with the black candle? It's an easy elimination. Like every day we're trying to do the process of elimination just to find the best of the best of the best that we find, and the black candle is an easy way to eliminate one, to just be like, okay, I'm not going to mess with this, or if I am in, I'm going to head to the sidelines. This is signaling downside risk. You have the gap between these two candles. You have the high of day here and the low of day there. If the candles work back and they drop down to this $2 level, that would fill the gap, you know, the top of this candle. So the candles could work back into the bands, bounce off of EMA4, and continue running higher. So keep an eye on these China plays next week. The pullback is going to provide more than likely, because notice how they're above the moving averages, a bounce play opportunity. If you look over here on the left, it's trading above all the moving averages, you know, and many of them are. So you know, the pullback should provide a technical bounce play, and then if they hold support, the uptrend could continue. Okay, so look for CNIT here. Notice how it's a very strong downtrend. You know, they're walking this down. There's nothing that you can do. You know, when this is, if you're a bull, you can't fight this. It's like trying to swim up a really strong current in a river. You know, you could just keep paddling and paddling as hard as you can, but you're not gonna have enough money to beat this. You know, you have to just go with the flow. The flow here, the river's flowing downstream. Either you're short or you're just on the sidelines ready to jump back in. And so what we're looking for is a break above resistance. If it breaks above this red line, that's going to be a signal this downtrend's breaking. If that red line's lined up with the EMA 13, then it could get going again. Then we want to see it get back above 293. If it can turn that middle Bollinger Band into support, then we're looking for a run back up to $4. If the downtrend continues, then you're looking at the 50 simple moving average at 244. It has to hold that level. Once you see that break, that's going to set up the gap fill, and then you're going to see a drop down to the 100 simple moving average at 199. I mean, that is a very likely possibility, but if you notice here, it hit a bottom and then it came up and it double bottomed. So it's trying to hold support here, but it is in a downtrend, and it is signaling more downside risk on the 15-minute chart. If you see a drop below 244, you could see a drop down to $2 and see that gap filled. Okay, let's look at CCCR. Okay, so this was more of a bounce play. The other charts had, you know, were in uptrends. This stock is in a downtrend. Okay, so it's under more pressure and it's going to be harder to get going. It's got some resistance to break. You know, the chart was in a tight channel through here, and then it broke down. You know, many times we're showing you the chart where it breaks out to the upside. So this is a good one, so you can see what it looks like when a chart breaks to the downside. And so basically, when there was this candle formed below the middle Bollinger Band and the candle started riding below EMA4, this is where you start the short position. So as long as the candles don't break above EMA4, you keep shorting. And so when you get down to the bottom and you see they're loading on the bottom, you know, this is the cover. When you see the long upper wick form here, you know, this is a you know, you could cover here for your short position or above the EMA4, either one. As long as EMA4, if you're trying to hold longer, it has to turn EMA4 into support to head higher. So as long as it's resistance, it signals more downside risk. Okay, so basically we just use the strategy for our bull strategy, the inverse of that for shorting. It's really basic. And so EMA 13 right now is the big level to break. It's the orange line here. If it can close above EMA 13, then it could get back up here above the 300-day simple moving average, which is the blue line, in the middle Bollinger Band, which is the 20-day simple moving average. As you can see, it hit the 300-day simple moving average and it pulled back. That's always going to be big resistance. No matter where it's at on the chart, if you hit that 300-day simple moving average and you fail to break, it's our signal to lock in gains. Now, if this drops back below EMA4 at 165, it will no longer be in play. Okay, it has to be above EMA4 to still be in play for a bounce play. Notice this is the riskiest chart to be trading because it's in a downtrend. Downtrends are, you know, it's more likely to continue heading lower than it is to start a new uptrend. Okay, so let's look at CCCL. Okay, this closed up 12%. It had the super long upper wick. Look at that long upper wick. Now this stock has a history of long upper wicks. Notice over here on volume spike days, each volume spike day. All right, so you have the big volume day, but then the long upper wick. Notice the volume day, but then there's the long upper wick. You know, you have a little bit of volume, but then you have the long upper wick. Each one of these are accompanied with that. You know, that's the pattern. Okay, so when you see it's a pattern, and the reason why is because look at the days there is no volume. You know, you don't see the upper wick. There's no volume. And so they're using every single time that volume enters to dump some shares, you know, and they were able to get 430, you know, 430 up here, but it's heading higher. It is in an uptrend. This is technically a better chart than this chart. Why? Because these candles are all below the moving averages. It's in a downtrend. It has to get above the 300, the 20, the 200, the 50, and the 100-day simple moving average before it can even get a new uptrend going. Now, if you look at CCCL, this is an ugly candle, but it's in an uptrend. You know, it's above the 200, it's above the 100, the 50, the 300, and the 20-day simple moving averages. It's above EMAs 13, 8, and 4. It's above every single moving average that we follow, right in EMAs 4 and 8 support higher. It's a very bullish chart. It's just one ugly candle, and so there is a small gap here. You could see that gap filled. Down here, if it drops down to basically where EMA 4 is at, see how there's a small gap right here? It could come down just like this, test EMA 4, bounce off of it, and continue heading higher. And that's what happens here. You know, as long as the EMA 4 supports higher or holding, the uptrend's intact. Okay, if you look here at the CCCL chart, you can see that it's got this sideways channel going. What you want to do is see a break above the upper Bollinger Band. It has a you know, a ascending triangle pattern forming here, where you have the descending resistance and horizontal support. So you have the horizontal support here, descending resistance. The chart's wound tight. And so what it needs to do is break above that middle Bollinger Band at 271 and above this red descending resistance line, and then it could come back up here to this just above 290. This closing price here at 945, that's the big level to break. If it can get above this 290 resistance zone, that'll be the signal it wants to head higher. If it fails to get above that middle Bollinger Band, you're going to see that 50 simple moving average down here tested, and then a drop down here to fill that gap. Okay, so you have the gap down here. Yep, down here. So there you go. Yeah, and so let's look at another chart here real quick. CNET. Okay, so yeah, so this was the one that was up big on Thursday, and we put out alerts saying that it was showing weakness after hours, and that it was likely to pull back, and that was a red flag, and so that was you know, that did come to fruition, that it did have a gap down open. You know, when a stock's running super hard and it's up really big, notice how it started the day down here around $1. You know, this was a giant percentage gainer on Thursday. If it shows weakness in after hours, many times that'll be a signal that it's going to pull back. And the risk of holding overnight when the stock's up multiple 100%, I think this was up 600 or 700%, then it is a gap down open the next day. And that's what happened here. And everybody got punished that held, and then the share price got pulled back. Now, keep an eye on it for a bounce play. Okay, so now we're looking at a potential bounce off of EMA 4 at 493. It has to hold this level. If it can hold EMA 4, then it could bounce off and push higher. If it drops below EMA 4, then you have EMA 8, and then you have the you know, the top of the gap is down here. So you have the gap between these two candles. And so, you know, you don't want to see it drop below EMA 13 because that could signal a gap fill below. Now, it did form bearish Haremy reversal pattern on Friday. So, you know, Friday's red candle fits inside of Thursday's white candle. And so, you know, this is it's not a super strong reversal pattern, but it is a strong reversal pattern. It does signal downside risk, and it is pulling back. And so if you look at the 15-minute chart, you can see here's the gap down open. You know, the close was up here on Thursday, and the open was down here, and then they drove it down, and then it traded sideways for a big part of the day. It got below the middle Bollinger Band, and then it finally dropped below the 50 simple moving average. So it has to get back above that level at 611. If the $6 zone turns into resistance, you could see it pull back down to this 100 simple moving average at 367. You know, $5 is going to be, the $5 level is a big level. Notice how it was resistance back here on the 4th, and so it was the break above $5 that signaled the breakout higher. It should be support when tested. If it's not, that's going to signal downside risk, and you're going to see it drop down to that 100 simple moving average. Okay, so one stock that isn't a China play, I forgot to put this in the last video, is RUBI. It did close up 6%. It's in the bull zone on RSI. It's at 58, between 50 and 70. Notice there was a gap on the chart in November between the bottom of this candle and the top of this candle. And so on Friday, there was a close above the 50-day simple moving average, currently at 209. That's the green line. If that level can hold next week, then the candles could work their way back up to the bottom of the gap level at about 245. That's going to be the big level to break on the chart. Notice how it broke out above high close resistance as well. It's walking higher. It broke out of this channel on the first trading day of last week, and then on Friday it broke above that high close level and the 50 simple moving average. That does signal more upside potential. So we're going to see if it can hold that level and possibly run up to the bottom of the gap. Okay, so yeah, thank you very much for viewing this video. If you find this video helpful, please subscribe to the YouTube channel and hit the like button. And I'll post the link to the stock app and chat below the YouTube video. Okay, thank you.